The fastest way to lose all your money in trading is to actually need it. You sit down at your computer on a Tuesday morning, the rent is due in 4 days, the fridge is looking incredibly sad, housing nothing but a half-empty jar of mustard and some questionable milk. You open your trading broker. You look at the charts not as a landscape of mathematical probabilities, but as an ATM that owes you exactly $850 to keep a roof over your head. This is a very confident mistake. The paradox of trading is that desperation actively repels profit. It is a cruel joke written into the code of the financial markets. When you need the money, you start seeing setups that simply do not exist. You hallucinate trend lines. You convince yourself that a tiny, pathetic little green candle on the 5-minute chart is the beginning of a massive institutional reversal. You are just a mammal trying to survive in a digital casino. It makes complete logical sense. You are a rational human being trying to provide for yourself. If you are up $50, your brain screams at you to close the trade and buy groceries, so you choke a winning trade to death. If you are down $50, your brain refuses to accept the loss because you literally cannot afford to lose that money. So you hold it until it becomes a catastrophic disaster. Math hates desperate people. The market mathematically penalizes your survival instinct. If you absolutely must make $500 by Friday, your probability of completely blowing your account increases by about 80%. Your risk management rules go flying out the window. The shift happens the day you stop needing the money. The best traders in the world view their profits and losses like a high score in a video game. They treat their account balance like inventory in a shoe store, not like a personal bank account. The moment you start translating red ticks on a screen into skipped meals or missed car payments, your logical brain shuts down. A legendary Japanese samurai named Yagyu Munenori once wrote that he who thinks only of winning will surely be defeated. When you trade with your rent money, you are thinking only of winning. You are fighting for your actual life. This makes you tense, predictable, and prone to fatal errors. You have to let go of the prize to actually win it. You can be wrong 60% of the time and still be a millionaire trader. Stop trying to be perfect. Most people come into trading to prove their own intellect. You probably did well in school. Maybe you have a good job. You are used to solving problems and getting a gold star for being correct. You enter the market expecting to predict the exact top and the exact bottom to prove to yourself and everyone else how smart you are. When you need to be right, a losing trade feels like a personal insult to your intelligence. It feels like the market is calling you an idiot. This ego-driven trading leads to the most destructive habit in the industry. You move your stop-loss further away because you refuse to admit your analysis was incorrect. You tell yourself the market is just testing you. You tell yourself it will turn around any second. You are bleeding money just to protect your feelings. The market ignores your feelings. Trading is not a game of certainties. It is a casino, and you are trying to play the house edge. An analyst gets paid a salary to go on television and be right about the direction of the economy. A trader gets paid to manage risk, even when they are completely wrong. Some of the most profitable trend-following traders in history are wrong 6 out of every 10 trades. They just lose tiny, meaningless amounts when they are wrong, and they win massive, disproportionate amounts when they are right. You must accept that a loss is just a business expense. It is like a restaurant buying paper napkins. It is just part of the overhead. You have zero control over what the market does next. You only control how much you are willing to lose finding out. Zen master Dogen Zenji said that to study the way is to study the self, and to study the self is to forget the self. In trading, the self is your ego. The burning desire to be right is purely an ego-driven disease. To master the markets, you must forget yourself entirely. You must become a faceless, emotionless executor of math. Pulling the trigger on a loss should become as boring as breathing. When I worked as a data analyst for a prop firm, I had unrestricted access to their back-end servers. I watched the raw data of thousands of traders. I wanted to find the exact mathematical difference between the 1% who take massive payouts and the 99% who destroy their accounts. I put that data into a book. First, it gives you the unrestricted server numbers. I show you the exact win rates, the risk to reward ratios, the daily loss limits, and the trade durations of the top 4,000 traders in the world. I show you what actually works. Second, it gives you mechanical control strategies. These are practical, step-by-step rules to physically force patience, control your panic, and kill overtrading dead in its tracks. Third, it gives you the survival guide. You get the exact mindset shifts the top 1% use to survive brutal drawdowns without losing their minds. Mechanize your brain. The link to grab your copy of the book is in the description. Read it before your next trade. Delete every indicator on your chart right now. You are looking for a magic spell that does not exist. You know the doom loop. You buy a course. You learn a strategy. You take 3 losses in a row. You immediately decide the strategy is broken, the guru is a fraud, and you need a new system. You switch to trading price action. You lose there. You switch to supply and demand. You switch to moon phases and astrological alignments. You keep adding things. You add a moving average. Then you add the relative strength index. Then you add Bollinger Bands. Soon your computer screen looks like a laser tag arena. You think that if you just find the right combination of colorful lines, you will never have to lose money again. It is a perfectly rational response to pain. You touch a hot stove, you get burned, you try to find a stove that isn't hot. Less is actually more. Adding more confirmation indicators does not increase your win rate. It just creates severe paralysis. By the time all 7 of your indicators align and give you permission to buy, the move is already over. You enter the trade right at the top, ruining your risk-to-reward ratio, and immediately lose money anyway. The true holy grail of trading is incredibly boring. It is emotional control, risk management, and keeping a journal. That is it. If you give a highly profitable strategy to a losing trader, they will still lose money. If you give a mediocre strategy to a professional, they will extract millions. The edge is not the strategy. The edge is the operator. There is an old Japanese proverb that translates to 3 years on a rock. It means that even a cold rock will become warm if you have the discipline to sit on it for 3 years. Strategy hopping is like constantly standing up to find a warmer rock. You never stay put long enough to see the actual results of your discipline. Every strategy on earth goes through losing streaks. If you quit during the losing streak, you miss the winning streak that follows. Pick one boring strategy. Sit on the rock. If you enter a trade and immediately drop down to the 1-minute chart, you are sabotaging yourself. You do the hard work. You analyze the 1-hour chart. You find a beautiful setup. You calculate your risk. You click buy. And then, instantly, a mild panic sets in. You zoom into the 1-minute chart. You lean so close to the monitor your nose is almost touching the glass. You stare at every single tick. Your heart rate matches a hummingbird on espresso. Every red candle feels like a complete trend reversal. You start sweating. The trade goes in your favor by $20. The anxiety of potentially losing that $20 becomes so overwhelming that you click close. You take a $20 profit on a setup that was mathematically designed to make $200. Let the trade breathe. You are constantly interfering with your mathematical edge by moving your stop loss to break even too early. You do this to feel safe. Moving a stop to break even is often the most dangerous thing you can do. You guarantee a 0% return on a trade that simply needed a little bit of room to move before hitting your target. Your initial trade plan is built by your prefrontal cortex. That is the logical, advanced part of your human brain. Your mid-trade decisions are made by your amygdala. That is the primitive, survival part of your brain that handles fear. When you micromanage a trade, you are literally letting the dumbest, most panicked part of your brain manage your money. The martial arts concept of Mizuno Kokoro means a mind like water. Still water perfectly reflects the moon, But if you throw a heavy stone into it, the reflection shatters into 100 broken pieces. When you sweat over the 1-minute chart, you are throwing stones into your own mind. You have to adopt a set and forget mentality. Set your entry, set your stop, set your target, then get up and walk away from the computer. The market doesn't know you exist. Stop acting like it is out to get you. You buy a currency pair. You set your stop loss perfectly. The price drops, hits your exact stop loss by a single microscopic tick, kicks you out of the trade, and then immediately rockets toward your profit target without you. A hot, blinding rage washes over you. You feel cheated. You feel like the market makers or the algorithms are specifically sitting in a dark room, laughing at you, hunting your specific stop loss. You want revenge. You want your money back, and you want it right now. So you increase your position size, ignore all your rules, and buy back in at a terrible price. It is just seeking liquidity. The market is an ocean. You cannot get angry at the ocean for a wave knocking you over. The market is not hunting your stop loss. It does not care about your $40. It is simply seeking liquidity to fill massive institutional orders. You just happen to place your stop loss in the exact same obvious place where millions of other retail traders place theirs. It is pure mechanics. There is no malice. You only get mad at a losing trade when the financial loss physically hurts you. If you were truly risking only 1% of your account balance, you would not feel the urge to break your keyboard. Your anger is just a mathematical warning sign that your position size is too big. The moment you feel anger, you are no longer trading the chart. You are trading your own emotions. The Japanese cultural philosophy of shikata ga nai translates to, it cannot be helped. It is what it is. This is not about giving up. It is about maintaining your dignity in the face of chaos you cannot control. You do not curse a typhoon. You rebuild after it passes. You do not curse the market. You accept the data, you step away, you clear your head, and you find the next setup. You do not need another colorful indicator. You need forced discipline. That is exactly what the Alpha Equity Manager does. Its best feature is the hard equity shield. Say you set a strict daily loss limit of 2%. You take a bad trade. The market spikes against you. The exact second your loss hits that negative 2%, the software takes over. It violently closes every open position. Then, it completely disables your buy and sell buttons for the rest of the day. You are physically locked out. You cannot revenge trade if the buttons do not work. And when your angry, panicked brain tries to go into the settings to change that limit from 2% to 3% just to keep gambling, the software denies you. The time-locked vault instantly rejects your emotional inputs. You cannot negotiate with a machine. It even has a pre-trade calculator to show your exact dollar risk before you enter a position. It is designed to protect your account from the most dangerous thing in the financial markets: yourself. The link to download Alpha Equity Manager is in the description. Protect your capital. That 20-year-old on social media making 10 grand a day from a beach is destroying your mind. You sit on your couch after a hard day of work. You open your phone. You see a kid who cannot even legally buy a beer flexing a sports car and posting screenshots of massive trading profits. You look at your own tiny, struggling account. A deep, heavy sense of missing out washes over you. You feel like you are falling behind in life. To catch up to this illusion, you drastically increase your leverage. You take massive risks. You blow your entire account. You are watching a casino ad. You must realize that 90% of social media trading content is pure fiction. They are trading on simulated paper accounts. They are suffering from extreme survivorship bias. They rented the car for 4 hours. You are comparing your real, messy, difficult life to a carefully edited marketing brochure. The trader flexing a 500% return in a single afternoon is not a financial genius. They are a reckless gambler who successfully survived a game of Russian roulette. You are comparing yourself to a statistical anomaly that will eventually blow up and lose everything. Real, multi-millionaire institutional traders Do not post pictures of luxury watches on the internet. They trade for a 15 to 20% return over an entire year. Real trading is painfully, brutally boring. It is not an action movie. It is watching paint dry while doing accounting. Miyamoto Musashi, the greatest swordsman to ever live, wrote a simple rule: seek nothing outside of yourself. You will never find your edge by looking at another person's screen. Trading is a single-player game. Your only competition is the trader you were yesterday. Comparing your Chapter 1 to someone else's fake Chapter 20 is a recipe for deep depression. Put your blinders on. Mute the noise. Staring at the charts for 8 hours a day is making you broke. You spend years in school, decades in a career, learning a very specific rule. If you put in long hours of grueling labor, sweat through your shirt, and sacrifice your time, you will be rewarded with a paycheck. Hard work equals money. You bring this exact same employee mindset to the trading desk. You think that if you stare at the glowing screens for 8 unbroken hours, you deserve to get paid. But the market refuses to give you a setup. You get bored. You feel entirely unproductive. Doing nothing feels like a crime. So, to justify the time you spent sitting there, you invent a trade. You take a low-quality, garbage setup just to feel like you are working. Overtrading is the #1 cause of death for a trading account. You get paid to wait. When you take a trade out of pure boredom, you are not investing. You are buying a ticket for a roller coaster ride, using the market spread and your stop loss as the entry fee. You are paying for entertainment. Data shows that the most consistently profitable day traders make their entire weekly profit in a combined window of about 90 minutes of actual execution. They do not trade all day. They strike, and then they leave. If your mathematically proven setup only appears twice a week, then forcing yourself to take 10 trades a week means 8 of those trades are statistically guaranteed to steal your money. In Japanese art, there is a concept called ma. It is the power of negative space. In music, the silence between the notes is just as important as the notes themselves. On a canvas, the empty space gives actual meaning to the dark ink. In trading, this space is the time you spend holding cash and doing absolutely nothing. You have to break your corporate conditioning. You have to find deep peace and satisfaction in walking away from your computer with 0 open positions for the day. You get paid for the high quality of your rare decisions, not for the frantic quantity of your clicks. Trading gets easier the day you stop trying to force the market to behave and start forcing yourself to behave. You stop adding complexity and start subtracting desperation. You stop wanting to be entertained, and you accept the quiet, repetitive boredom of simply executing good math. It is a strange way to make a living, but the moment you finally stop fighting it, the math starts working for you.